What's going on, guys? Welcome back to the channel. If this is your first time here, please click the subscribe button below. I would greatly appreciate it. So today I am making a video on how to buy a house. My last video, I did a video on renting versus buying, but now I kind of want to run through steps and things to consider when you're looking at to buy a house. And I think these things are really important. Because most of us, right, we're not taught how to buy a house, right? They don't teach this to us in school. Maybe our parents don't even teach us. So we kind of get thrown into the mix of, we have no idea what to do, right? So I'm going to mention 5 things. They're more so points just to consider on the homework you should do and the stuff that you need to take a look at when you're buying a house. So the first thing a bank or a credit union or whoever you go to get a loan is going to look at is your employment status, right? Are you a W-2 employee? Are you a owner of a business, right? What income do you have coming in every single month? And is it reliable, right? How long have you been employed, right? Banks are going to look at your history of employment, your income. All of those things are going to take into consideration when they're looking at, is this person going to pay back the loan that we're about to give them, right? So income, they're going to take a look at that, right? The second thing they're going to look at is your debt to income ratio, right? How much debt do you have? Do you have student loan debt? Do you have credit card debt? They're going to look at your credit health, right? How long have you had credit established, okay? So when did you open your first credit card account? When did you begin repaying those loans, such as your student loans, okay? So they're going to take a look at all of that stuff. Do you have timely payments? Are you going to be a reliable person? Because listen, when you go to a bank, they want a great relationship with you and you should want a great relationship with them. But they're really going to look at, and what they care about is this person going to pay us back this loan, or are they going to default on the loan? So they're going to take in all of those things into account when they look at, is this person a good candidate and should we give him or her the loan? Okay, so the third thing you're going to look at, and this is definitely important too, is your assets. Okay, so what do you own? What money? How much money is in your checking account, your savings account, your investment, your brokerage accounts, your retirement account? What do you own? What physically do you own, whether that's tangible or intangible assets, okay? So they're going to look at all of those different things when they're taking in effective, like I said, should we give this person a loan or not? So what do you own? How long have you had those assets? Do you have the money to back the loan? Let's just say, God forbid, you lost your job, right? So they're going to look at all of those different things and take them into consideration. So fourth thing to consider, and I think this is where a lot of people, myself included, before I bought my first house, is where they get the money for the down payment, okay? So most of our parents, and I think a lot of society teaches us this, is, oh, you need 20% to buy a house. Totally wrong. I think a lot of people today aren't even buying a house and putting 20% down, depending on their financial situation. But, for instance, veterans loan, you can get a veterans loan for 0% down and put no money down. There's a lot of different programs out there, grant programs that you can get money for first-time home buyers, but as little as 3% down to 20% down, okay? And depending on the bank that you work with, and depending on your credit score, you have a lot of different options, and you should consider those options, and you have to consider what my monthly payment's going to be. If you put 3% down and 3.5% down, you're going to be paying PMI, which is private mortgage insurance, right? That insurance is for the loan, and it's for the lender in case you default on the loan, right? Because you're putting less money down, you're basically a higher risk to the bank and the lender when you're putting a lower percentage down. But there are so many options out there, and a lot of it comes in contact with what is your credit score, what's your credit health. But, there are loans that, like I said, that range from 0% to 20%, and sometimes people put even more down than 20%, okay? So there's many different loans that you can qualify for. It's about shopping around. It's about going to different lenders, going to credit unions, going to banks, and seeing the rates and what you qualify for. So don't ever work with one bank. I think that's, me personally, I think that's the worst thing to do. I think you should shop around. I think you should shop around with real estate agents too if you're going to use a real estate agent. Don't set your heart on one person. Ask questions and find out these things that you should find out. So down payment, closing costs. Closing costs on a house are typically going to be anywhere from 1% to 6%, okay? So a lot of buyers too, you can get a seller's assist where basically you're paying less in closing costs, and the seller is basically putting up the money for your closing costs, okay? So there's a lot of different ways you can go about that. That's something that you can research yourself, or your real estate agent is really going to give you that information. But the amount of the closing costs, that's going to come down to your lender, and your lender telling you how much you're going to be paying in closing costs, when the loan closes. And then, your last point really is, once you get a pre-approval for a mortgage, which is huge. If you get a pre-approval for a mortgage, you take that letter to your real estate agent, and you start looking at houses. You start going to open houses. You start going into houses, because a lot of sellers are going to want to see that this person is a serious buyer, right? They're not going to let someone into their house that isn't a serious buyer and could potentially purchase the house that they're selling. So those 5 things, there's obviously more to consider. I'm going to put all of these in the body below the video. So there are things that you can look at and consider when you're buying a house. So I hope you guys enjoyed this. I did my last video on renting versus buying, and this one on how to buy a house and things to consider. Thanks, guys.